My name is Rick Bloodworth. This is the Common Sense Christian Financial Channel, and today we wanted to dive a little bit deeper into the liquidity crunch that seems to be occurring in the silver market on the retail side. But before we do that, I wanted to look and just talk about where the market is right now. It's about half an hour after noon Central Standard Time, so we've got about 3.5 hours before the market closes for the day, or at least takes an hour pause before the overnight markets start opening. It is Wednesday, January the 21st, and right now we're just a little bit below $93 an ounce on the spot market. On the silver market today, the market has been as high as $95.61, just a little bit off of our all-time high that we set yesterday for an intraday high of $95.99, at least on the U.S. markets. And we opened up at $94.47, so obviously we're about $1.50 below where we opened up today. We're kind of pushing the low of where we've been today at $92.21, which is a little bit lower than yesterday's low. But I want to remind everybody that yesterday we closed at an all-time daily high, $94.47, and so we're just not too far off of that. We do seem to be developing something of a range right now. It's a little bit out of this $93.64 range that we started with, and so we may want to move this line up to 96, but we really don't seem like we've broken out of the range, at least not with conviction in one direction or another. We started on the 12th of January in a range that we'd been in for a couple of weeks that was pretty much capped out at $84, but when we moved above that on the 12th, we just kept going up, and so we have not seen that type of a breakout in this current range, and so I wouldn't say that we're actually broken out of it, even though we've traded a little bit higher than the top of that range for a few days. We seem to be settling below it right now. Whether it'll continue to go lower for the day or whether we break out to new highs is anyone's guess. This is not a particularly wide range. As a matter of fact, we've had 2 days of just about a $3.50 range. That's not just a really big range in recent weeks. Now, for the history of the silver market, a $3.50 range is obviously huge. But again, since the first of the year, that's pretty tame. It's about as small of a range as we've seen. So we do seem to be kind of settling down maybe a little bit as hopefully we try and get to that $100 level. But if it continues to just kind of stall out here, don't be surprised if it continues to go down for a little bit. But that's where we are in the market today. I thought it would be good to start with that because where we're at has a lot to do with the liquidity crunch that we're seeing right now. I think just about everybody is aware of the fact most of the coin dealers in America got a letter from the big refinery in America, the largest, I think, in America that has a nationwide presence, sent out letters to all of their customers telling them that they were changing the way that they were doing business, at least temporarily. And that began with the idea that they're no longer going to take any alloyed or fabricated silver, so no foreign coins, no 90% coins, no sterling silver. They're just going to be taking 999 fine silver right now. And if the dealers wanted to get paid for that the day they brought it in, they were going to have to take $15 behind the spot. So today, with spot being at around $93 as we speak, that would mean that the best that they could get would be $78 for their $999 fine. And obviously that's a non-starter for them. So the dealers are starting to get pretty creative. I was listening, I think it was to a gentleman that has a station called Coin Help You. I have dealt with him one time in the past, sold a small collection of coins to him. He really has a coin shop that has been in the past more numismatically oriented, and he still certainly focuses on the numismatic coins, but he also is a realist and has been dealing with mainly silver of late. And so he was talking about the letter that he had got as well that the other dealers have been talking about, and how that was changing, at least for the time being, the way that he was able to do business. I think he mentioned that he had to turn away maybe 40% of those who wanted to sell just yesterday, and he wasn't sure exactly how he was going to approach it today. I listened to Brian Vermillion from Vermillion Enterprises in Florida this morning, and he was talking about the fact that he also received notice from his refinery that they were backing off on the prices they were going to be giving them for gold, and that in fact there was going to be a greater delay for refining gold as well. And so that factor is starting to show that it's not just the silver, not just the alloyed silver that we're looking at right now, but we're also now starting to get into the 999 fine, which the refiners obviously would prefer, and then also the gold, which hadn't been a problem until apparently the last few days. So keep an eye on this. The liquidity crisis, or at least liquidity problem, may be burgeoning into a crisis. It may last for quite some time. Who knows? And the question, I think, for those of us in the stacking community is this: if we're going to lose such a big part of our profits to premium cuts, then what does that mean for us? Is it even worth it to invest in silver right now if we know that we can't sell it back for anywhere near what we bought it for? And so that's the really good question. I think we need to address it pretty honestly and maybe look at some alternatives. Things are changing. A lot of the coin dealers are no longer able to take silver in right now. Some of them that are limiting the amounts of silver, and sometimes they just cut it off in the middle of the day because they've got too much. A lot of these dealers are starting to offer flash sales, which is good for us. They're starting to offer silver, especially 999 and 90%, much closer to spot, hopefully below spot for the 90%. As a matter of fact, I saw a deal yesterday where they were selling 999 silver for $3 under spot. And so these are some developments that I think will help us, especially if you're dollar cost averaging and you have just got a set amount that you spend per week or per month on silver, and you're not really looking to sell any right now. Well, the buying opportunity, even at the high prices, may be a little bit more attractive in the fact that we can start buying under spot as well. And then, of course, I've mentioned that on eBay, if you keep your eye out, especially in the Buy It Now section of U.S. silver coins, that every once in a while you'll find a pretty good deal. And I know some of you have mentioned that you found some pretty good deals on that. And so there are just some different avenues if you are wanting to purchase where you don't have to pay at spot. Maybe you can get it for a little bit under spot. Now, as far as selling back, what do we need to do? I've heard a number of people start talking about more of the peer-to-peer sales. I know through the years I have sold to my father-in-law, to some brother-in-laws, even to my dad at one point. And so there are times where when you're dealing with people that you know and love and have to sit down and eat Thanksgiving dinner with, you're trying to make it fair for both of you. Hopefully you're a Christian and that's your desire anyway. Here's some other thoughts. I've gotten some information in recent days. There's been several of the viewers that have recommended, I think it's Monumental Metals, but they have mentioned that they've been getting better buyback prices from them. And so that may be one source you want to check into. I got an email from another viewer just yesterday, a gentleman that owns a coin shop in Jackson Hole, Wyoming. And I think they're called Arc Silver. I'm not sure exactly what, but you can get online and search it. I think their website is arksgo.com. And so you can probably check out their prices on that. Give them a call. It'll give you the information. I'm not recommending Monumental or Arc Metal by any stretch because I've never sold to either one of them. But these are ones you might want to check out. And the reason I mentioned that, the gentleman at Arcs Go said that right now they're paying $3 under spot for good quality 999 rounds. They're paying $2 over spot for Eagles, and they're paying $6 under spot for 90% silver, for good 90% silver. How long that will last, if that was just today or if that's something that will last into the future, I don't know. And again, I'm not giving a recommendation. They certainly don't sponsor me. I don't take sponsors. which I'll mention why in just a moment. But again, I believe it's something that is very worthwhile you're checking out. And if you do business with any of these firms or other ones and you found a good price from them, I would really appreciate that if you would kind of give me a heads up on that, because I think we're all in this community trying to get the best buy and sell prices that we possibly can. And so these are two more possibilities. I believe that may cause some of the bigger dealers to be more illiquid for a while, but it will also force them, hopefully, to adjust their business models to where they're getting back much closer to spot. I'm not complaining about these dealers. If I had a coin store and that was my livelihood and I wanted to keep the doors open, I would do what I had to do. I don't think they're crooks and cheats. I'm sure there's a small percentage that are, but most of the ones I've dealt with are incredibly honest. They have high integrity. They just have a business to run. And for them to sacrifice maybe a 30 or 40-year-old business just to try and make a few customers a little bit happier, that doesn't make sense. So if you find prices that you're not happy with, just be courteous, thank them, and move on from there. The part that I wanted to talk to you about the not taking sponsors or recommending different people, when I was starting out just out of college, I became a real estate appraiser, and I was trained by my dad. And from what the bankers around Wyoming told me, where we were appraising, was he was just as honest of a man, as experienced, as knowledgeable of a man as they knew, and his integrity was sterling. And I found that out very quick. Of course, I knew by growing up with my dad that he was a very honest man and had integrity. But when he trained me, one of the things he drilled into me was to avoid any appearance of a conflict of interest. That meant not appraising properties for people that you knew well, because that could give the appearance of a conflict of interest. And so I've kind of carried that over on this. One of the reasons I don't want to take sponsors is because that would be a conflict of interest. Then I couldn't pass along information and you be certain that I was doing so with no hope of me benefiting financially from that. There's a lot of people who do take sponsors. I'm not suggesting for a moment that they are dishonest in any way, but I will say that that has a tendency to make you a little reluctant to criticize people if they're paying you money to promote their goods. So that's one reason I don't. Another part of that conflict of interest, I've had a number of people that have said, when you sell, we would like to buy from you. And while I appreciate your trust in me, let me say a couple things. One, you don't know me well enough to do that. But secondly, for me, again, that would be a conflict of interest, trying to make a profit off of those that are listening to the videos. And so I've tried to avoid both sides of that issue. Again, there's a lot of YouTubers that get involved with different types of commercial enterprises. That's fine. That's up to them. But as far as just trying to avoid an appearance of a conflict of interest, that's very important to me, because I want you to be able to trust that what I'm telling you is what I think is right, instead of something that might be influenced by friendships or by sponsorships, by getting something back on that. Now, there's another remedy on this supply crunch that we're undergoing right now that I think may be worth considering, and it may help us to understand that it might not last for just a real long time. And that's just this: the commercial side, the industrial side, the sovereignties side, the people who are buying on the COMEX and the London Metals Exchange and on the Shanghai Exchange, these are the main drivers of price in silver. The retail side, people just buying and selling coins and silver in increments of less than 100 ounces, well, we might make up about 5–10% of the overall market. It's the big boys, the commercial players, that make up the market. There are nations that are now starting to accumulate the metal. There are big companies now who have been investigating for a while, actually purchasing silver mines so they can kind of bypass some of the pricing problems that we're seeing now. But they're obviously big players on the exchanges right now. They need the metal for things like solar panels and electric vehicles and this AI explosion that we have going right now, not to mention what we've seen for so many years in the electronics field. We've got a lot of uses in the medical field, and all of these people have absolute need for silver if they're going to be able to stay in business. And so they're going to go to these big exchanges. They're going to bid whatever price that they have to bid. They're going to pay whatever price they have to pay in order to attain this metal if it is an absolute critical part of their business. And so just that factor alone, the fact that 90% of the demand comes from people who have to have it to do business, well, that could solve the liquidity crisis on the retail side. Well, how is that? The retail side is one that we sell to coin shops or we sell to metals companies, and typically they will very often, if they don't have an immediate buyer for it, they will sell it to a wholesaler who will then distribute it to other companies, or they will take it to a refinery. Many of our coin shops go directly to the refineries as well. And now the refineries are backed so far up that they have ceased to take product in many instances, and the product that they are taking is the best of the best, and they're still paying a huge discount for it. And so these refineries that deal with the retail side are backed up for the moment, but I want you to think about the fact that there are countries like China who actually go around the world shopping for silver. They will actually buy doré silver. This is something that Andy Schechtman has talked about for over a year now. It's the scrap, it's unrefined, and they will get it right from the mines and they will take it back to China to refine themselves. There are people, again, companies, big companies, who are looking into and who have already bought some silver mines, or at least big stakes in silver mines. And so they are taking care of it in that way. As the supply dwindles, if the supply dwindles, and that could change if we have a worldwide recession or depression. But until it changes, the supply-demand picture, the demand is much higher than the annual mining output. And even when you add the annual mining output to typical recycling, we're still coming up short. And that's why they've been going into different areas right now. The refineries had helped them for a while, but now they're so backed up they can no longer just keep pulling from the retail side. What will happen when they start needing the silver, but they can't find it from their usual sources? And I think what's going to happen, what you're going to see, is big companies, maybe even sovereignties, start buying up a lot of this excess material that has yet to be refined. Maybe even the 90% silver, the fabricated, the alloyed silver from different sources, and they'll just start stockpiling it themselves and they'll refine it when they can. Anything to get their hands on the metal. Is that occurring right now? I don't think it is, but I don't think it's very far from becoming an occurrence, and especially if our refineries continue to offer $15 back of spot when there are people standing in line to pay spot for 1,000-ounce delivery bars from the big exchanges. Everybody likes a bargain, and people who are in business are particularly adept at sniffing out these bargains. So what I'm saying is, this supply glut that we have on the retail side right now that has resulted in a liquidity problem that may turn into a liquidity crisis may have just a limited time to run. So if you don't have to sell silver, if you weren't planning on selling it anyway, especially if your plan is to just keep buying a little bit each month, take advantage of the fact that you can get a little bit below spot right now and just keep on buying what your plan was. If you don't have to sell, don't. But if you do, shop around. Think about this peer-to-peer. Think about some of these companies that are offering to buy at a higher price than some of the others. And just kind of deal with this as best you can, and then sit it out. Just breathe every once in a while. Sometimes opportunities like this are a good opportunity to just sit back and reflect, to rework your plan if it needs reworking, to confirm if it's a good plan or not. I had one experience that I did want to share with you today. I don't want to give the specifics because this was with a gentleman who was going to a company that he frequents. But today he had gone in and he had wanted to do a trade on silver for gold and found out that the shop owner was not that willing to do the trade. While he would buy the silver, he didn't want to trade it for gold. The gold-silver ratio right now is very attractive, and I've heard several people who have been able to go ahead and make a trade with various dealers for maybe 53, 54 ounces of silver for an ounce of gold. If you can get a good deal like that and you really want to get gold and diversify out of silver, I think this is a fantastic plan. Just understand some of the dealers are getting reluctant to even do that. So if you find a dealer that's willing to do that at a ratio that you're happy with, go ahead and do that now before that part of the liquidity problem starts to exacerbate as well, if it does. But anyway, just something to be thinking about for right now. Again, appreciate your comments. Let me know what you think in the comment section. Thank you for watching, and thanks to all of those of you who have been so kind as to subscribe. I hope that this helps, and I hope we'll see you again tomorrow. God bless.